It is a fine afternoon, and welcome to this stock webinar. Basically, we are looking at the introduction to the investment in the offshore stocks. This is also another product that you can be able to diversify in because apart from Forex, indices, and such kind of stuff, commodities, you can be able to invest or to diversify and start investing in the offshore stocks, right? So, personally, how I do it, Forex is basically making you liquid. That is making sure that you have some monies here and there, right? You are liquid, I mean, that is, and then now you can use those profits in terms of now investing in other markets because there is still tomorrow, right? There is still tomorrow. So you have to look at that. So when we talk in the stocks, when we start now having a conversation in the stocks market, we are looking at long-term investment, right? Because the stocks market is it's a bit a long-term, right? It's not like the Forex trading, okay? So welcome everybody. You can see Ben, Carol, Kate, Derek. I can see you all. Carol the Noteka, Masharia, good afternoon. Rita, right. Salama Salmini. So, I believe you can be able to see my screen and welcome to this particular session. Welcome, Vera. I think the rest will find us ongoing. So, like I was talking about, just a brief introduction. The financial market is a bit extensive. When we talk about the global financial market, it's a bit extensive because here we are looking at different types of markets. We have the commodities, we have the FX, which is the common one. We also have the stocks market. We also have the indices. All these are markets that you can be able to look at. And now, once the cryptocurrency, there has always been a debate on the cryptocurrency, whether it's under the financial market, only that it has not gotten fully recognition globally in terms of regulation. But we are seeing now most of the countries trying to adopt the regulation of the cryptocurrency, including our country, Kenya. Recently, we saw the VASP Act 2025 being passed, right? And the president assented to it. And therefore, what we are awaiting is a committee which will be formed by the CMA and some people from the central bank to be able now to oversee that. And the moment now that goes through, it will be a market that you can be able to tap into because there are quite a lot of opportunities as well in that particular market. That is the cryptocurrency markets, right? So in today's session now, we are going to specifically look at the indices, right? We are going to, sorry, we are going to specifically look at the stocks. And when we talk about the stocks market, like I said, this is something long-term. This is something that you are looking at it long-term. And therefore, the reason why we are saying investing, not trading, because there is a difference between investing and trading. So trading is short-term. Investing is long term, right? So, as the word says, offshore stocks. So when we talk about offshore stocks, this is basically something that is outside our jurisdiction, right? So they are equities listed outside your home market, right? All foreign companies' shares available locally via different platforms, okay? So for us in Kenya, when we talk about offshore markets or offshore stocks, we are talking about anything that is outside Kenya, even if it's Uganda, even if it's Tanzania, it's offshore, right? Because that's the basic definition of offshore. Anything that is outside within our jurisdiction. Okay. So this is whereby maybe probably you find yourself buying shares of Apple, you find yourself buying maybe Samsung, Nvidia, Meta, right? So different Amazon, different stocks. And when we talk about stocks, a stock is basically when we define a stock, or when we want to talk about I mean, when you're talking about a stock, the first thing that you need to know is what is a stock, right? And a stock is basically a share or an equity which represents the ownership in publicly traded company. So if you go and buy shares of a company that is publicly listed or traded company, therefore you're investing in that particular company and you become a shareholder because you've bought some shares. Using a local example, if you go and buy Safaricom shares, you become a shareholder of Safaricom, right? So maybe probably if when they pay dividends, you're entitled of dividends. Now in the percentage form of how many shares have you invested in that particular company, okay? So, and therefore you realize that now the fact that when you own a stock, you hold a portion of that company, therefore you become a shareholder. And as a shareholder, again, there are different rights that you can be able to have depending on which type of stock that you have invested in. Because we have preferred stocks, we have preferred and these are the ones. We have preferred stocks and what we call the common stocks, right? So common stocks have more privileges in terms of voting rights, and preferred stocks they have less privileges in terms of voting rights. Okay, so but we will look at them basically so that we can be able to understand them. Okay, so that's a stock. So stocks they are a type of financial market or financial instrument that are bought and sold in financial markets, and they are fundamental components of the broader now financial ecosystem. Okay, so stocks are slightly different from Forex because Forex is leveraged, but stocks are not leveraged. Okay, so and because stocks are not leveraged, therefore you participate in stocks only through buying. Remember, Forex, you can make money through buying and selling, right? Both ways, buying and selling. But now when it comes to stocks, it's only bullish momentum that we want to see. So basically meaning it's buying, right? We want to look at buying opportunities. And when the stocks now maybe probably starts depreciating, or going on the downside, you might want to really analyze that particular stock and see whether you are going to dispose it from your portfolio. Disposing it is now what we call sell. So you hear people selling, they have sold Safaricom shares. So they have disposed, not opening another position, but selling is the opposite of buying. Basically, for them now closing the buy position. So they have to sell them. That is the word that is used, right? So it doesn't mean that they are opening new positions. Okay. So and like I mentioned, for us here, we are going to focus on more on the offshore stocks because with scope markets, think this is the only broker in Kenya that you can put to invest in the stocks market. And that is you owning those shares, buying those shares, physical shares, also doing what we call the fractional stocks. We will be doing all those things even as we proceed because this is more of a series. And I promise you, come next year, we'll be having more of these stock sessions, not only once in a month, but we'll be having most of them. So why do we want to invest in the stocks market? The first thing that we want to invest in the stocks market is basically through it's basically for diversification. Okay, so we can be able to diversify in different ways. You can be able to diversify geographically, right? You can be able to diversify sector-wise. So when we talk about diversifying geographically, we are talking about investing in different geographical jurisdiction. So maybe probably investing in maybe UK. You can buy some in the US. You can buy some stocks in the Middle East. You can buy other stocks maybe probably in maybe other African countries. So basically, what you want to do is to have a balanced portfolio, right? Geographically. Then you can also, as you diversify geographically, it is also good to diversify sector-wise. And sector-wise, according to global industry classification standard, they have classified 11 sectors for the stocks. And these include number one, the health sector. Number two, we have the material sector. Number three, we have the real estate sector. Number four, we have the consumer staple sector. Number five, we have the consumer discretionary sector. Number six, we have the utilities. Number seven, we have the energy. Number eight, we have the industrial. Number nine, communication services. Number 10, financials. And number 11, we have the technology sector, right? We have the technology sector. So these sectors are very significant because, again, when we talk about a sector, these are companies like, for instance, health sector. You find these are companies in the same area of business, all right, in the health industry, like maybe probably the AstraZeneca, maybe probably the Johnson and Johnson, right? All these are companies in the health sector in the same area of business, right? In the same area of business. So you realize that companies in the same sector exhibit similar characteristics, right? Because they are doing similar business. Companies in the real estate, they exhibit similar characteristics because they are all in the real estates, okay? So, and now, maybe probably if I am to expound slightly in terms of sectors, so you realize that maybe, for instance, if we look at the first one, the health sector. So this basically includes companies in pharmaceutical, biotechnology, medical devices, and health care services. So they usually play a critical role in addressing global health challenges. Okay. So, and examples of that, we have the Johnson AstraZeneca, right? We have the Roche Holdings, we have the Novartis. I believe we have all of us interacted with the Novartis, right? So Novartis, these are company. If you have ever bought some medicine and you look at and you bother to read, that is if you read, because me personally, I usually read those description, you realize that most of them have been manufactured by Novartis. There is that logo of Novartis, right? So, and maybe probably when you look at now the material sector, just giving an overview so that you can be able to understand, material sector is also referred to as material and natural resources sector. So this now is a sector that includes companies that are involved in mining, right? Companies that are involved in forestry, agriculture, and the production of raw materials, such as maybe probably metals and chemicals, okay? So a good example here is the Rio Tinto, right, company, or maybe probably the BHP group, or maybe probably the BASF group or company. So those are some of the companies in examples of the prominent companies now in the material sector, right? So then we have the real estate, and at the real estate, basically, you will find a different companies, of course, very direct when you talk about the real estate. At least you know what real estate, what entails in the real estate. Okay, so in the real estate, this basically includes companies that do what? The development or maybe probably the management of real estate properties. Okay, the development or management of real estate properties. And this sector, it also includes real estate investment trusts. That's what we call the REITs, right? And with the REITs, these are companies that basically purchase multiple income, multiple these are companies that purchase multiple income product assets, such as office building and hotels, right? So examples here include the American Tower Corporation. It's a very big company in the real estate. Simon Property Group is also a very big company when it comes into the real estate sector, right? Then we have the other company that is the other group that is the consumer staples. And the consumer staples, these are basically companies that produce the companies that include the processing of production or manufacturing of food, beverages, such kind of things, as well as producers of household goods and personal products. All right. So you realize that this company, all companies under the consumer staples, they are also referred to as recession-proof industries. Why? Because since these are goods and services that consumers need, so regardless of their current financial conditions or maybe probably the economic conditions, consumer staples will always be at in profits. Why? Because whether the economy is tough or not, whether we have inflation or not, human beings have to eat. So, and we say these are companies that involve food, beverages, such kind of things, production of household goods and personal products, right? So you realize that the reason why now they are called recession-proof industries. For instance, Walmart, Procter and Gamble, Coca-Cola Company. These are good examples of consumer staples. And one thing maybe probably that you might realize is that these companies, they usually have, you might find a company in more than one sector. So it's a consumer staple. You'll also find it maybe probably a technology, maybe in another, like consumer discretionary, or maybe probably another sector. So one company can fall under more than one sector. So number 5, I mentioned about consumer discretionary sector. And now this is the one that deals with the wants. There is the human needs. So needs, these are needs that needs, they're the ones that comes first. Things like food, shelter, clothing, these are human needs. And then now we have the wants. So consumer discretionary, these are companies that now manufacture the human wants. Human wants, these are luxurious things, right? So you'll only purchase them if you have the power to. So, like for instance, when you talk about Tesla, you don't need to purchase a Tesla because a Tesla is luxurious, not unless you have that money to purchase that luxurious vehicle. But if you don't have, then you can go with Toyota, right? Or you can go with another model that you can be able to afford. Or maybe probably if you can't afford a car because maybe it might be a luxurious thing, therefore you can do away with it and life will still continue. You don't have to have it. Okay. So, and the consumer discretionary sector, this is where now it's also known as the consumer cyclicals, and it includes the companies involved in retail, e-commerce, hotels, luxury goods, leisure and travels industries, etc. So, and you realize now, like I've just explained, in contrast to consumer staples, these goods and services are generally those that consumers don't necessarily need to have, right? You don't need to have a Tesla. So, of course, that tells you Tesla company falls under the consumer discretionary. And also, you'll find Tesla company under the Magnificent Seven, that is in the technology sector, right? Another company here is Amazon, all right? So, Amazon, you'll find it here as a consumer discretionary. Home and Depot is another good example under the consumer discretionary as well, okay? So, then just brushing or taking you through the sectors so that you can understand, because it's important for you to understand these sectors, what they deal with, so that now you can be able to, when you are now building a portfolio, you're able to know how to diversify your portfolio, right? Because diversification, we are dealing with diversification here, the first parameter here. So, then we have the utility sector, and the utility sector basically this includes companies providing essential services like electricity, water, and natural gas distribution. A good example of offshore utility stocks, we have NL company, we have Nextra company, Nextra Energy company, we have Duke, all right? We also have the Southern company. Those are the most prominent ones, right, under the utility sector. Then now, after the utility sector, we have the energy sector. Under the energy sector, this comprises companies that are involved in the production, distribution, and supply of energy resources, including oil, natural gas, and renewable energy. And here we have a lot of them here in Kenya, ExxonMobil. I think this is what rebranded to Kenol Kobil, right? We have Royal Dutch Shell. This is the Shell company, what was V-Power. those who like using V-Power. So we have the total energies, that is the total petrol station that we all know. It falls under the energy sector. So it's all these are Shell, Total. They are all international companies as well. Okay, and one of the rules of investing, it's Warren Buffett emphasizes that you invest in companies that you know how they make money. So if I ask you how does Shell make money, at least you have a clue because these are companies that I've interacted with. If I ask you how Coca-Cola makes money, you know because these are companies that you interact with their products, right? So and that gives you upper hand even trying to understand them, their model, how they make money, because you want to really understand how they make money so that you can know whether it's a viable company to invest in or not, right? So then we have now the industrial sector as well, also referred to as manufacturing and industrial sector, and these covers companies in the sector covers manufacturing, industrial machinery, aerospace, defense, and other industries involved in production of goods and equipments. Good companies, Airbus Group. We have Caterpillar, Siemens. I know maybe probably let's take even Caterpillar. I know most of us have interacted with the caterpillars, and mostly, especially when you're almost nearing the election cycle, you always see a lot of caterpillars in the villages, right? Trying to make the roads right, so that you know what I mean or what I'm talking about. Even right now, there is a lot of construction that is happening around, and you'll always see these caterpillars doing the excavation and all those stuff, right? So it's an international company listed in the stock exchange. So it's a publicly traded company. So then we have a communication sector, right? Communication services sector. These are companies that provide communication services such as mobile, internet, and telephony. For instance, we have Alphabet, which is known as Google. We have AT&T, right? We have China Mobile. We have Vodafone Group. So all these are examples of companies offshore that provide the communication services. If you come to Kenya, you'll find the Safaricom. I think it's the only one which is publicly traded locally because Airtel is not yet listed in the NSE. So we'll only talk about Safaricom. And the reason why Safaricom is always more of a monopoly, even though we have those other companies, but Safaricom overshadows, it's like it overshadows them all, right? So then we have the financial sectors, and these are very enticing sector again. I think it's rare to see companies in the financial sector making losses, especially the banking ones. Because when we talk about the financial sectors, it covers different sub segments. So it covers the banking, it covers insurance, it covers asset management, and other financial activities. So this sector, I find it is very integral. Whenever we are talking about finance, it is very integral to the global economy and includes a wide range of companies. Like you have seen companies under the banking segment, insurance, asset management, etc. And examples here of offshore, we have JP Morgan Chase, which is a common one. They already have an office. I think was it last year or last year, but one that they were authorized to have an office here in Kenya, in Nairobi. We have HSBC Holding, all right? We have Allianz, we have Visa, Bank of America. So all these are examples of companies in the financial sector. I know from this, maybe probably if you have not interacted with JP Morgan Chase, you have interacted with Visa, right? I'm not sure how many have interacted with Visa. Maybe you can show me, you can type. This afternoon, so we want to really engage ourselves. Anyone who has interacted with the Visa company here? Anybody? Yeah, so Mike Masharia has, Ochieng Elvins has interacted. I can see your hand there. Yeah, so Visa. So Visa is basically the company behind your ATM, right? So if your ATM is Visa enabled, then you have interacted with the Visa company, because it enables that the ATMs basically to be able to function. So at least you should be knowing now how Visa makes money, because one of the way that Visa makes money, when you go and withdraw with your ATM, and there is a charge that you incur, so part of that charge goes to the Visa company, and also the other maybe probably the other remaining with now the company that is giving you those services. For instance, if you go with your Visa Mastercard or with your Visa ATM to Equity Bank, you withdraw. So some fees will go to Visa, other fees will go to Equity. Okay. So that's one of the ways that Visa really makes its money, right? And then finally we have the health sector. I mean the technology sector, again very crucial because we have been seeing a boom in technology. The likes of Magnificent Seven have been really doing quite well. They are all under the technology sector. So this encompasses the companies in the development, production, and distribution of technology products and services, right? It is also known for its rapid innovation and growth potential, right? Because we have been able to see, like I said, a lot of development or growth from the technology sector. So examples, we have Apple, we have Alibaba Group, we have Tesla, we have Amazon, we have Microsoft, Apple, right? All those Magnificent Seven, they all fall under the technology sector. Okay, so that is now the sector. So now, when you're diversifying, you can diversify geographically as well as sector-wise, because you don't want to concentrate all your portfolio in one geography. Maybe let's say, or one region. Let's say maybe US, and then maybe probably something happens in the US economy that makes the stocks in the US to underperform, right? So basically it means your portfolio will not really be good at all. Everything there might be red. Also, you don't want to concentrate on one sector, maybe the technology sector alone, or maybe even the consumer cyclical alone, because in case we have anything shaky news that might cause some bearish trajectory for this sector, therefore all your portfolio will be in red. So you want to diversify. Some stocks in the US, others in the UK, others in different jurisdiction, and also the same way you want to do with the sectors, right? So you can proportion different percentages in terms of maybe technology sector, because maybe probably let's say technology sector is doing quite well. Maybe you can do 30%, right? Or maybe even 40%. Then you do maybe 20% financials. You do maybe probably 10% maybe consumer staples, right? So you are proportional percentage in terms of you building that portfolio, right? Again, basing on what is really trending. So another reason why I invest in the offshore stocks is access to industry that are not available locally. So like the US tech companies, which are doing quite well. So you are able now to access that, right? So you also potentially higher growth or different valuations. We have seen these stocks market, offshore stocks market, they are very liquid compared to local market, even though now our local market is really doing quite marvelous. I believe you have seen that there is a lot of development, massive development, positive development in the local market, because they have even come up with an index that is able to track the companies in the financial industry, the likes of Equity KCB. So there is now an index that is able to track that. So there are massive opportunities if you look at it locally, and also internationally. There are now a lot of massive developments. Locally, initially you were to buy, I think, a minimum of 100 shares. Right now you can even purchase one share of Safaricom. Initially it was a minimum of 100 shares. So a lot of developments are coming in. So even now when you combine now with the offshore stocks, you get multiple benefits or opportunities for you to be able to at least make something. So there is no excuse for you not investing, right? So then currency diversification, of course. Now when investing in the offshore stocks, you want to diversify your currency. Let's maybe probably when you consider now aspects to do with inflation, because inflation again is one of the key things that you really want to look at when now it comes to investing. So when you talk about inflation, basically, inflation is the sustained increase in the prices of the general prices of goods and services in an economy over a period of time. And this, what it does, it decreases the purchasing power of a currency. So if maybe probably we see that inflation in Kenya is really skyrocketing, then we can look at a jurisdiction, let's say maybe probably in the UK, where the inflation is a bit lower or stable, and then now we can invest in the stocks in the UK. Basically, what I'm doing here is that I am diversifying my currency. I don't want my money to stay in Kenya shillings because there are chances that it is gonna lose their eroding power. So I'll buy some stocks in the UK, and that will now be a currency diversification, right? Then there is the tax or estate planning reasons, right? This one you need to consult your tax advisor so that they can guide you accordingly. But again, if you look at some jurisdiction, there are jurisdiction which are tax friendly, right? So you have to look at that again. There are some jurisdiction which offer tax friendly terms in terms of capital gain, all right? Because investment in the stocks market, you pay the capital gain. Here in Kenya, I think it's 15% that you pay to KRA. So broker doesn't do that for you. So for the broker, you just invest, you make your money, you withdraw. So it's up to you as a loyal Kenyan citizen to declare your wealth, right? To declare your earnings, I mean, and you file your returns normally. You know, right now the KRA has really tightened the loop that all expenses are to be verified by the e-teams, and e-teams is a printed receipt. So a lot of people have been evading tax now. They're gonna not do that because there'll be that verification, right? There'll be very tight measures which are being infected here. But what I'm trying to say is that scope market, it has nothing to do with KRA. So it's up to you. You make your money, you withdraw, and then you go and it's up to you now to declare the profits that you made and you file your returns accordingly, right? So you have to, if now you invest in the offshore stocks, you have to check on the tax regulations in those particular companies, how much they pay or something of the sort. Also, estate planning is very important because estate planning is whereby you realize in the US, they are so much into, I'm just giving an example in the US, majority of them, they so much invest in the stocks market, right? So what they do is that now they give that as an inheritance, right? So they leave that as inheritance. I know here in Kenya, we are used to broti maguta maguta. You get your share of land, right? That's it, okay? So, but now when you go to these developed countries, they are even able to now give their portfolios as an inheritance, right? So, like Charles Munga, he left a good portfolio to the person who was the hire, right? So that's how they do in those developed countries, right? So you can even start investing as early as now. Maybe probably you have a small kid who has been born, so you start investing knowing that maybe probably this is an inheritance that I'm going to leave to this child, right? So very advanced way of doing that, and it doesn't involve a lot of paperwork or something. It's straightforward. I think you can do some more research on that so that you can be able to understand it better. Okay, so like I said, one of the things that you want to look at when it comes now to investing under the currency diversification is inflation. You also want to look at this jurisdiction that you want to invest in, maybe in the US. How is inflation? How is inflation in the UK? How is inflation in maybe probably UAE, right? So, or wherever you want, maybe probably in South Africa, etc. Wherever you want to invest in, you have to factor that. Okay. So, and inflation is basically measured using consumer price index and also the producer price index, especially in the US. So this is able to track the changes of prices, and it becomes risky to invest in an area that has very high inflation, where the inflation is stubborn. It's a bit risky in terms of currency diversification. So you want to find an area where there is stable inflation, right? Because what inflation does is that um, inflation can have significant implications for both returns on offshore stocks and also the decision-making process for international investing. So you want to consider such kind of things, right? So then we are talking about some key global exchanges. Remember, we talked about you being able to invest in these companies. We said the definition, we said stocks, these are companies that are publicly traded. So, meaning that there has to be an exchange. So, examples of global exchanges, the one that are commonly known, we have the New York Stock Exchange or NASDAQ in the US. We have the London Stock Exchange, right? That is in the UK. We have the Euronext. Euronext is basically in the pan-European or the Eurozone. We have the Tokyo Stock Exchange in Japan. We have Hong Kong Stock Exchange in Hong Kong. We have Johannesburg Stock Exchange in this is in South Africa. We have Shanghai Stock Exchange as well, which is in China. We have the Frankfurt Stock Exchange in Germany. All right. So basically, these are the most common known stock exchanges, right? But what you need to understand is that each and every country has a stock exchange. Even Uganda, there is a stock exchange. Tanzania, there is a stock exchange. Kenya, we have ours, Nairobi Stock Exchange, etc., etc. So some of these companies that you're going to interact with, you find that they are listed in these global exchanges, right? Now, this also represents the jurisdiction. So if you're in the US, you want to look at NYSE, that is the New York Stock Exchange or the NASDAQ. If you're in the UK, you want to look at those stocks that are listed in the LSE, that is the London Stock Exchange. Same way, if you're in maybe probably Johannesburg, if you want to invest in Johannesburg, in South Africa, you want to look at those stocks that are listed in JSE, that is the Johannesburg Stock Exchange, right? So the reason why, again, you find that maybe for instance, the reason why you need to understand that these stock exchanges is so that you can know which companies are listed there. Like for instance, if we look at the New York Stock Exchange, right, that is it's one of the leading, world largest and most well-known stock exchange, and it's located in the New York City, right? So, and some of it contains the a rich history of many prominent American companies, including Apple, Microsoft, JP Morgan Chase, etc., etc., right? So then in the London Stock Exchange LSE, in the UK, it's a leading stock exchange in Europe, headquartered in London. It is known for its global and presence features listing from UK-based companies. For instance, it includes a lot of financial, mining, energy, and pharmaceutical companies, and also the technology companies. So it is known for its diverse and dynamic market. So you can be able to look at it geographically. And now geographically in that stock exchange, you'll find companies in different sectors, from mining, energy, pharmaceuticals, etc., etc. So you have to do the due diligence or more research to understand companies that are listed, or the companies that are listed maybe in that particular sector. Because you see, one of the good things with stocks, investing in the stocks, offshore stocks, is that it really entails a lot of research. This is not just where you go to the charts and you do your technicals. No, there is a lot of research that is needed here. Fundamentally, you have to have a lot of fundamental backups while you are buying a company. And when you are buying a company or when you're analyzing these stocks, we'll be doing those sessions. More of those sessions come next year. How to analyze those stocks, how to build a portfolio. And you realize that if I want to invest maybe probably in Apple, I will look at maybe like 5 companies that are competitors of Apple. I analyze all of them fundamentally, technically, so that now I can determine whether Apple indeed is the one that is best to invest in that particular sector, right? So maybe I might be surprised that Apple is not really the best at that moment, and maybe probably Amazon or maybe probably Microsoft. So you pick a group of like four, three companies in the same sector. You analyze them. You look at their financials, their earning reports. There are the three books of finance that we look at: the income statement, the balance sheet, and the cash flow statement, right? And then therefore you're able to determine also technically, you're also to look at the technicals and a lot of things, management reports, however the management themselves have invested in this company. So a lot of details that we usually look at, and that even makes it more interesting because anytime you're doing some research, I'm one person who love reading. So I love a lot of reading because as you read, you're also gaining some knowledge, right? And you get some quite good information that maybe probably you might have maybe probably overlooked, all right? So there is a lot of research that is needed here, and which is quite good for me, okay? So now, those other companies, those other stock exchanges, I will give you that some homework. You go and look at the companies that are listed in those stock exchanges. Tokyo Stock Exchange. What companies do you think are listed in the Tokyo Stock Exchange? Anybody without Googling? Anybody without going to Google? Any clue of a company in the stock, the Tokyo Stock Exchange? Anybody in the chat? Yeah. Mm. Mike, I'm sure. Yeah, yeah, yeah. Mike, uko na ufa ya Sony. Mike uko na ufa ya Sony. Ameanza na Sony. Taiwan Semiconductors. Yeah, I can see guys, we are very well versed, very well versed. Toyota. Yeah, yeah. I was looking for Toyota being the first one because the guy in front of you is always a Toyota. You know that the slogan. Taiwan Semiconductors, perfect, perfect, perfect. So very nice one. Okay. So yeah. That's fantastic. Okay. So then you can look at the rest: Hong Kong, Johannesburg, etc., etc. So when it comes to investing in the stocks market, it also carries some risk as much as it's not the leverage risk, but it also carries some risk. And one of the risk that we usually talk about is the currency risk, right? Like I said, you have to do some due diligence so that you can be able to understand, so that you can be able to look at aspect to do issues to do with inflation, because inflation will always affect the currency because it erodes the currency. I mean, it erodes the purchasing power. So basically, when we talk about currency risks, changes in exchange rates can affect the returns of on offshore stocks, right? Or it can even it can affect them positively or negatively, right? So like right now, when you trade and you get your money in terms of dollars, if you convert into Kenya shillings, it becomes an advantage, right? It becomes an advantage because you receive some significantly higher money, right? You know what I'm talking about. Just if, you will when you convert Kenya USD into Kenya shillings, of course, you will really smile a lot, right? When converting USD to Kenya shillings. But the initial point of depositing Kenya shillings being converted into USD, you'll feel some pinch because now of our currency, right? It's a bit weaker compared to the USD. But now when you're withdrawing, you'll be laughing because now it is the opposite. You'll get some more money, right? You'll get some more money. Okay, so that is basically what we are calling the currency risk. So you find that the inflation differentials between countries can contribute to currency volatility and therefore impacting the value of offshore investment. Okay, so then there is the political risk, right? There is the political and sovereign risk. So when you're talking about this kind of risk, basically what we are talking about is the political risk is basically looking at the political stability of a company, right? So political instability of not a company, but of a country that you want to invest in, right? So I'll give a pattern that has always been very normal in our jurisdiction. You realize that anytime we near the election cycle, the Nairobi Stock Exchange starts performing poorly. So we see investors starting pulling off. Why? Because you have had this trend that like in almost every election, there'll always be some tensions, maybe in terms of post-election violence or such kind of things. So that's a cycle that has been there in the NSC. So, and therefore, you realize that when a country has political tensions, or the political atmosphere is not stable, so what it does is that it chases away the investors, especially the international investors, right? And if the international investor starts going now, the volatility reduces, and we start seeing companies now turning bearish, right? So it's always good to look at that. Anytime you're investing in a country, how is the political stability of that particular country, right? Because it will definitely affect the performance of the stocks in that particular country. Then, when you talk about the legal and the regulatory and legal differences. So this is important. Why? Because the first thing that you want to do is verify company listings and regulator. So you have to verify that this company is listed, right? And the regulator in the US, we know the SEC, right? In Kenya, we know the CMA. Those are the regulators. Hong Kong, we have SFC, right? We have FCA, right? FCA. So you have to check all these things that the company indeed is regulated. It's listed and it's regulated. It's listed in a stock exchange and it is regulated, because we still have private stocks, right? We still have companies that issue private stocks, right? So these are companies that are not listed publicly, are not tradable publicly, but they still can be given that opportunity to raise some capital, and therefore they will start selling some shares. All right. So you have to check for sanctions, restrictions. Probably if these companies have violated some of the legal requirement or the regulatory requirement, because if they don't obey the regulatory requirements or the legal requirements, basically they might be restricted or they might also be fined, right? And if they persist, the company can be shut down. So you can imagine where you have invested in such a kind of a company, the risk is high. So if it's being fined, the fines will definitely come from the profits of that company, and therefore it will cause the investors not really enjoy what the dividend. So in case instead of being paid $1 per dividend, so once they factor in the heavy FT fines that they have incurred, you might realize that maybe they will pay maybe $0.50 per dividend because some of the profits went into paying the fines. Such kind of things. Sometimes they not be also in a position to pay the dividend. Sometimes those fines can also lead into massive losses. And sometimes, like I said, there is the risk of bankruptcy or closure of that particular company. Then now we talk about the liquidity risk, right? So the liquidity risk basically this comes in terms of liquidity risk. You'll find it in terms of volume that is likely to be traded in the volumes in that particular company. You find that there are some companies that are not really, they don't have really much liquidity. They don't have really much volatility per se. Okay, so that might also affect the earnings of that particular company, and it will definitely affect you as an investor as well. Okay, so operational, custodian risk, and settlement delays. These are basically inbuilt, right? Whereby you find that some companies can have operational risks, the custodial risk as well, the settlement delays, such kind of things. And then now, like I said, for the taxation risk, you have to consult a tax consultant, someone who knows, or you can even do your own research. I know the taxation parameters, maybe probably in the UK, in the US, when you invest in those companies, what happens, such kind of things, okay? Or maybe probably you can consult a tax person, a tax expert, okay? So the key thing here is now for you being able to do now after, because we have those risks. So you have to be in a point whereby you do your own due diligence. And here I've just provided you with a checklist that will help you do the due diligence before you settle on either investing in that particular company. So number one, you want to look at the company's fundamentals. And fundamentals here, we're not talking about NFP, we are not talking about CPI, we are not talking about FOMC, right? Because I know that is what we are used so much into Forex. So here we are talking about the financials. So I had mentioned about the three books of finance: the balance sheet, the income statement, and the cash flow statement. Those are three books of finance that you usually look at when investing in these companies, okay? So, and in the subsequent webinars that we'll be having in regards to this, we'll be also looking at all those how to read those financials, how to interpret them, and such kind of things. That's why we'll be talking about the valuation metrics. So because you want to know these companies that you're investing in, is it overvalued? Is it undervalued? So if a company is undervalued, then it gives an opportunity for you to be able to buy it, because it means that it is priced lower than its intrinsic value, right? So if a company is overvalued, it means that it is overpriced, way above its intrinsic value or book value, and therefore there are chances that now investors might start disposing or selling off that company, right? So that is not the best company to invest. So when you are balancing your portfolio or rebalancing your portfolio, basically meaning you are looking at the companies that you have already invested in. So you might realize you invested in a company that was undervalued, but now with time, maybe after 1 year, 2 years, this company becomes an overvalued. So you can dispose it off from your portfolio, right? So, and here for valuation, we use different metrics. That is the ratios, the PE ratio, price to earning ratio, the EV ratio, the PP ratio, right? So you compare it versus peers. So if, like what I told you, if I want to invest in Apple, I have to look at the peers of Apple as well. So I compare these metrics with Amazon because it's a competitor of Apple. I compare these with the Microsoft because it's a competitor of Apple, and I see which one is giving me a better P ratio, better PP ratio, that is a price to book ratio, etc. So there is a way that we interpret these ratios, and like I said, we have a lot of things to cover in the subsequent sessions in terms of now understanding how to interpret this ratio and know whether a company is overvalued or a company is undervalued, right? Then you have to look at the industries and macro outlooks. How is the industry like? Right? So is it really doing well, the industry? There are chances that we might see a boom in that particular industry. So the macro outlooks, what are the things that are likely to affect this particular industry in case we see the interest rates maybe probably being cut? So how is it going to influence maybe probably the prices of Apple, the prices of Amazon? So such kind of things, those are the questions that you want to answer so that now you can be in a position to know which company to invest in. So management quality and ownership structure, very important again. You don't want to invest in companies that a CEO has bad reputation, right? So you want to invest in a company that even the CEO himself has invested in that particular company, because if they have invested in that particular company, they will put their best foot forward because they also want to make money from their investment, right? So you want to look at the reputation of the management. You want to look at how the management have invested. Because if I'm investing in a company and the management themselves have not invested in that company, then it raises some red flags, right? So meaning that they themselves are not confident maybe probably with the performance of that particular company, which, like I said, raises some red flags. Then we have the liquidity. So this is what I was talking about, the volumes in terms of volatility. So you have to check that as well. Regulatory and legal issues, again, very significant here. You have to check that whether the company has bad reputation, whether the company has violated any of the regulatory requirement. Like I say, the one of the regulatory requirement is these companies to publicly declare their financials. So they will post these financials in their websites. Investors, in their website, they have most companies have that portion called investors relations, right? So they will now put their investment. They will now have the investment. They will now have their financials published publicly because since they are publicly traded companies, investors need to see those financials so that they can be able to make decisions in terms of whether to invest in those companies or not. Then the currency exposure and the FX sensitivity, that is the conversion of the currencies. Again, you have to look at that so that you don't incur very high exchange fees or conversion fees, which might not add up when you are now withdrawing, right? So you might be in profit, but that profit has only covered the conversion fees that you incurred in. So even if you dispose, you find that you're still like neutral. Sometimes you might realize you've incurred some few losses there, here and there, right? So it's important again to look at those particular aspects, right? So remember, just laying a foundation today. We will have a session where we'll be able to now the subsequent webinars to elaborate more on that. So how do you build a simple offshore allocation? This is one now you want to diversify. So you determine the target exposure. So percentage of investable asset. So you can look at it geographical and sector diversification. So whereby you want to avoid concentration. So concentrating on one geographical area or one sector, because that's high risk. If you concentrate on one risk region, it's high risk. So what we want to do here is have a portion of maybe probably, because now you're investing, let's say maybe probably in stocks, right? You have investing in Forex. So you can say maybe probably 50% of your cash you invest in stocks. Maybe probably 30% of your cash you invest in FX. Maybe probably 10% of your cash you invest in money market fund. That is now looking at the entire global financial market. Then now come back to stock. So the 50% in stock, you can say maybe probably 40% you'll invest in maybe the technology sector. Maybe 30% you invest in the financial sector. Maybe 20% you invest maybe probably in another sector, and then you have 10% in form of cash, right? Why is it in form of cash? Because opportunities keep arising, and opportunities might arise and you don't have cash, right? So that will now hinder you from even taking advantage of those opportunities. So in investing, you should always have cash, that in case an opportunity comes, you have some cash you can be able to invest in, right? So basically, we'll be doing a deeper overview of building a portfolio, and we'll be looking at all those allocation metrics, right? So then there is the rebalancing policy and frequency. So you need to rebalance your portfolio because it's long term. It doesn't just mean you buy and forget. No, some conditions. Those that, and then you're able to rebalance those stocks that you feel that maybe they are overvalued. Now you dispose them, right? If you feel maybe probably there's some bad news that have emerged, maybe a company that you had invested in has been fined or has been caught in fraud issues. Of course, that's you don't even want to think twice, right? You or definitely dispose that particular company off. So that is basically what you're calling rebalancing. As you're disposing some off, you're also looking at what you can be able to bring on board now. All right. So the frequency, you can determine on the frequency of doing that, either quarterly. All right. Mostly quarterly is good. You can look at it quarterly. Right. So then we'll be looking at some sample allocation, conservative, balanced growth, because you realize these stocks are different. We have growth stocks. So growth stocks, these are stocks that their prices are expected to increase with time, right? So, and with growth stocks, you realize that they don't give dividends. So if you're a dividend investor, you want then therefore to focus on income generating stocks, right? So those are the stocks that pay dividends, right? So examples of growth stocks, these are you'll find the likes of Tesla. Tesla doesn't pay dividend. So it's a very good example when it comes to dividends, all right? It's a very good, it's a very good example when it comes to growth stocks, right? So when you talk about dividends income, all right? So these are stocks that pay, stocks that you find that once you invest in them, when they declare dividends, you're able to also gain some dividends because you are a shareholder, right? So some of the key mistakes that you can avoid as an investor in the stocks market, basically focusing on headlines returns without understanding their impact, especially the foreign exchange impact. So it's not just about you've heard that Nvidia has crossed the 4 trillion mark, and then that's just an headline, and then you rush and start buying. All right. So that is more of chasing hype, right? So don't really be guided by that. Just try to do some deeper research, right? Try to do some deeper research. And I'm going to show you to let you know some various places that you can do those research to get more information, right? So don't underestimate the taxes, all right? Taxations and fees, mostly, especially when investing in the offshore stocks. Like I said, look at those regions that are tax friendly. Don't over concentrate in a single market or sector, again, or even a single geography, because that's again high risk in case we have some bad negative news that it might affect the performance of those companies negatively, right? So stop chasing hypes. Yes, Nvidia crossed the 4 trillion. Yes, it has done that, right? Don't chase the hype. When you chase the hype, sometimes you're likely to invest, do what we call, because the hype comes with what we call a buy and dump. So because of that hype, a lot of buyers come in, they push the prices really high, the company gets overvalued. So if you don't know how to check those metrics, then investors start dumping that particular asset and it really dumps, right? And you are now in the middle of losses, very big losses. So don't chase the hyper growth. So just be calm, do your research, do your analysis, and then make your decisions based on your research or your analysis. Okay. So these are some of the tools and resources for research. So you can use financial terminals and platforms like the Bloomberg, Refinitiv, right? So these are very good in terms of stocks. You realize that. Also, you have the stock VIX, all right? We will have a webinar where we'll be looking at these platforms or tools, because you realize some of these ratios like the PE ratio, PB ratio, you don't have to calculate them, right? They're already calculated for you. So for you or for us is basically to know how to invest in, how to interpret them so that now you can make the decision. So public filings, you can use Edgar, that's where companies file, send their 10K reports, right? So companies house, right? These are tools and resources. SEDA, you can use the HKE, X News. So all these are places that you can do to get more information. There is the broker research, analyst reports, independent sites, right, that publish some great information in terms of stocks, right? Like come next year, starting the stocks YouTube as well. I mean, a segment in the YouTube channel whereby discussing purely the stocks market. Okay. So then we have a currency converter and country risk rating. So you have to look at the currency risk rating because there are countries that you can invest in. The risk is very high. I don't want to mention names, and I realize that you might not make anything. Investors will definitely shy off from those countries which are rated high risk, right? So you want to know these country risk rating so that you can know where to put your money, right? So that you can know where to put your money. So that's the introduction of this particular investment in the stocks market. So in the next one, we are going to go a little bit high now because this is more of a series. So we are going to advance it now, the next one, and we'll be looking at the screening, right? The screening of the stocks, how we screen these stocks, how we interpret those financials, financial statements, etc., which will be very, very more of practical because we are going to be going to these now research tools because that's where we get all that information, right? In Bloomberg, Revenity, Sedal, Company Housing, Edgar, all these areas. That's where we get those additional information so that now we can be able to interpret that information and see whether it is viable to invest in that particular country or not. Okay. Mashari, I've seen your comment. I don't want to mention companies, but I've seen your comment. Yeah, that's a good example. Okay, that's a good example. So I think that's it, ladies and gentlemen, for today. Not unless you have any question. Okay, not unless you have any question. I think we'll be having this session. The Tuesday of we'll have the next session will be Tuesday. Let me confirm the dates. The third week of December. On Tuesday it will be on 16th. No, yes, on 16th. Unfortunately, on 16th, I think that's when the NFP has been scheduled. I think the NFP has been scheduled on 16th, right? It has been scheduled on December 16th. It will be on a Tuesday still. Yeah. So you can see a Tuesday, December 16th, we'll be having the NFP. So therefore, the stocks will do it on Wednesday. That is the 17th, right? The 17th. It will be among our second last for this year because we'll be closing here on the last session we'll be doing for this year will be on 18th November. Then we break until we break there until Jan 5th, right? So someone saying I started buying S&P 500 ETF, fractional shares weekly, planning to hold for years. Perfect. That's very good. Problem is now I have a lot of position open in MT5, which is messy. Is there a way to consolidate all these open position into one? Since it's the same stock, just bought at different times. No, there is no way you can consolidate. Okay, there is no way you can consolidate. So I believe what you're doing here is the dollar cost averaging, whereby when you see the price maybe probably tank or reduce, you had some portions like that. So unfortunately, there is no way you can be able to buy. There's no way you can be able to consolidate to be one position because you bought them at different prices. Even if you bought them at the same price and you open different position, there's no way you can consolidate that, right? But unless now you close all of them and you open one single position, but there's no any other way you can be able to consolidate that, Vera. Okay, and congratulations. These are good. Nini to trade. That shows your financial intelligence because this basically imitates the S&P 500. So, and we have seen S&P 500. It has always been giving returns averagely 12 to 18% annually. So, yeah, quite a good investment, Vera. Congratulations. Okay, any other question? Any other question, Florence? Any question, Florence? Florence, mwaka imeenda kuisha Florence na janiongelesha. Tutakosana Florence. All right, any other question? I'm just kidding. Jua tuwezi kosana na Florence, tumetoka mbali. Any question? All right. So if there is no any question, Eric too, I can see you. Question.